All right, folks, welcome to a trade recap. Today we took a short, and the short we took was this one, but eventually we had another short which I didn't take because I want to take one trade a day. And this short was, to me, it was worth a shot, but it didn't really make sense to me because in the 4 hour time frame, we're so close to a 4 hour CRT that I was like, why is the 4 hour CRT not getting a SMT or why is it not getting a purge, right? And like usually for an hourly CRT, when it's a new situation, I usually wait for when there's a clear trend. When there's a clear trend, using the hourly CRT makes sense, right? When it's a clear one-sided movement, but when the market is chopping is new situation and there's an hourly CRT, it doesn't really make sense to me. And that right there is the reason why we lost this whole trade today. We did go in a deep profit. We did have a fairly swing short right around here. We took this Ferrari gap short. The Ferrari gap entry was kind of off. We're supposed to be entering like on the Ferrari gap, but even on the live broker, spreads are crazy, man. But yeah, we went down. We went a little deep profit, but eventually it reversed right after here. So on this leg up at the 1756 is when I entered short. Eventually market just rallied down. That eventually fully reversed, heading off stop loss. Why did it do that? Simple, because this CRTs, it didn't make sense for the market to reflect out of the CRT. It made sense out of this plot. It was a neo reversal profile too. We can use the CRT and we for the as an advanced entry. You can eventually go down to a 5 minute time frame to enter the short. As eventually here is where our pattern happened, right? But on this as well, we already did have a shorting opportunity, which was right around here, right? We're gonna talk about it, right? So going first, this trade right over here was a late entry because I'm first supposed to enter here, but I was in the charts during that time, so I was like, okay, I'm gonna wait. I'm gonna see if I can get a different. I want to see if I can get a different failure swing, same pattern, then enter short. That would be nice and fine. Then I'm willing to take a short. That eventually did happen. Then eventually took a short. Then eventually a loss. Which our trade for the day should have been this one, right? Which we're gonna talk about as well. Now going over to the higher time frame to the shorting opportunity, our higher time frame bought for the short. Obviously, we had a weekly. I don't really care about the weekly time frame at the moment because why? Simply because of the there's long-term draw liquidity, right? Short-term liquidity is my main focus because I enter my trades on 15-minute, 5 minute, and 1 minute time frame. So the weekly is such a higher time frame that we only want to use the weekly when the short term aligns with the long term. In this case today, short term did align with long term, but it was what? It was Friday. So Thursday and Friday, and the market's closed at a fair price. So we only target the CRT has too low. That's it. So in the weekly time for the weekly ERL back to IRL, but this IRL already had SMT here. So we're looking for a weekly ERL back to IRL again, because I'm saying from here on in forward, we had SMT with this low to the upside. So we had a weekly at the moment, weekly ERL back to IRL, a weekly CRT to the downside as well, a daily. At that moment when I was trading, we had a classic expression profile. We had not a classic profile. We had a consolidation reversal Thursday high of the week, which got falsely broken. That's what the market eventually we had a right step to the downside. Then that one delivered. We had a daily C to the downside. We had a daily ERL back to this IRL. Why this specific IRL, not this IRL, because this IRL is a CRT, so it's gonna highly get disrespected. But the CRT got disrespected, so now going for this alone. For rag up alone would make sense. Now going to lower time frame on a 4 hour time frame, we had a 4 hour daily range at that time. We had a during the first trade I took, that was the setup I should have not taken. This is the setup we should have taken. With the first one for this setup right here at the 9 a.m. setup, I was looking to take a trade, but I was like, man, I took my trade for the day. I'm done for the day. I'm gonna walk out of the chart. I don't want to be forcing setups. Although let's say it goes in a winner, but I do not want to take more than one trade a day. I want to be very highly precise with my. I want to have very high precision. But on a lower time frame, for the market content narrative, we had a daily range, super low, super high, stable high, premium discount. When premiums want to sell off, as well as we had a range high, range low. Now, how come the range high, weekly CRT high, no range low, weekly CRT low, as well as we had we're selling above the daily opening price and the weekly opening price. So selling above that will be very nice because open, key level, expansion, open, rally, total soup, key level, expansion, and close, right? That's it. Which that's what we had on the next, that's what we had on our 9 a.m. candle. But otherwise, on this candle, we're looking to go down to this specific low during this specific time. We'll take this short because there's a 4-hour CRT and CRT got purged. We had the right amount of confirmation, so we're trying to get down, rather low down here. It makes sense, but it eventually gets respected. Then eventually we're gonna shut down just to this 5 a.m. low because this is the biggest CRT we have in a 4-hour time frame. Now going down to lower time frame for this specific trade that we took on the early AM session was this near continuation with the hourly CRT. As I said before, it didn't really make sense to me. Market was consolidating. I was like, why isn't the 4-hour CRT getting tapped? Why isn't the 4-hour CRT getting souped or having SMT? I didn't want to take the trade at first, but I was like, let's see. This deserves a shot. It did deserve a shot, which is a good thing, right? We took the action. Now we know, okay. And the only time we want to use the hourly CRT is when the market is clearly expanding in one-sided movement, right? So expanding like this, market right here, expanding in one-sided movement. So looking for hourly CRT like this would make sense, right? But looking for a hourly CRT on this on this type of range when the market is not clearly going to one-sided, when the market is clearly not doing a one-sided movement, it didn't make sense to me. So I was like, that's why I said I'll give it a shot / it deserves a shot. And when I say I'll give it a shot, like I don't mean it's an A+ setup. It's like it didn't really deserve a shot, but it's worth a shot, right? It's worth a shot. The setup is like worth a shot, which is like not very high probability. So go down to lower time frame for this hourly CRT, which is the wrong setup we had. We should have not taken this execution. But at first on this hourly CRT, we had a trade right over here. We had SMT with the 7 a.m. 7:05 a.m. with the 7:10 a.m. Then as I said, this right over here should have been our first trade we should have taken. Then eventually I wasn't in the chart during this time. When the market came around here, then this is where I was in the chart. Then I look to execute this Philly swing, right? Because it's right over here, puts out the highs, Philly swing. Then eventually was looking to short this Philly swing, which was, pretty nice to short down. But this one should have been our other trade. The downside it still would have gone a loss, but that would have given us that better entry, right? At first on this trade, right over here, we had a SMT. They call it a pair. This is the 709. 7:10 a.m. The 7:11 a.m. was we had SMT with, and the 5 minutes is the hourly CRT with a 5-minute time frame, and we're looking for that 5-minute SMT. So right after SMT happened, we had consolidation number 1, number 2, number 3, number 4, and when it consolidates, it doesn't really gotta consolidate in that specific price point. All we want is not very big of a price movements, right? We don't want to see very large price movement right after a kilo gets tapped, because that can show a sign of a early total soup, right? Which when that happens, people will usually get in, but they'll get stopped out once again, because that's a very early total soup, right? Because you usually want to let the market want the total soup to end, then enter, right? You don't want it to get in too early. So when that happened, I was looking to enter the trade straight right over here. At that time, I said we should have not been in trade, but this one right here should have been our trade here. So now going down to an even lower time frame. We had a 1.3 stop loss. The minimum stop loss we're gonna have is 3 pips and above. So it's 30 pips, and eventually we have to increase our stop loss here by, you know, 0.5 ticks here because of, you know, the stop is too tight. So we want to let some room. If we're in the right side of the market, you usually want to let the market breathe, right? In this case, this is why we're letting it breathe. Eventually shutting that down there. Why we're looking to shut it down all over from here, from this specific price point, because this is a total soup, total body soup. Not total body soup, is a rejection block. You know, the total soup right over there, right? So all of our trades are gonna be based on total soup. So why did I not enter on this basket liquidity and I entered on this body of the rejection block? Because they're relatively close, and this is how to get tagged because the wick is very big. The wick is in balance. So we were looking for that to get tapped, then we could short it down. Then our target was the same goal. And eventually it didn't get met, which was a 14-hour trade, which, as I said, it went to a loss, which, as I said before, this should have been not our trade, but this should have been our entry pattern. Entry pattern comes last, right? This is why I prioritize you guys to, you know, prioritize a lot of, you know, higher time frame for the lower time frame. So this is why I actually get, this is why I, you know, I said this deserves a shot, this slash, I'll give it a shot, because there was going to be a big lesson out of this, right? And the lesson is that, the only time we use the hourly CRT is when the market is clearly doing a one-sided movement in a near situation. If it's not doing a one-sided movement in a near situation, we will not be using a hourly CRT. We're going to be transitioning to a 4-hour CRT, because on this day, was the market doing one-sided movement? Market looks like it was chopping. So using an hourly time frame is very bad when the market's chopping, right? Because there's so much hourly candles. Hourly candles are present every single hour, right? So there's so many hourly candle. So what you want to do is scale up to a higher time frame where there's less candle, like the only 6 candles, right? Which is the 4-hour time frame in a day. So higher time frame, you want to switch, because the only time you want to use the hourly CRT is when you're very advanced and when there's a clear one-sided movement. In this case, will we do a clear one-sided movement? No. And this day, do the clear one-sided movement? Yes. So shorting a longing up a hourly CRT in this case would be nice. As I said before, this right over here would have been a nice hourly long. But this, no. Are we doing a clearly one-sided movement? We're not. In this case, we are. So it would have made sense. So the lesson is there. That's the lesson. And the next trade, the trade that we took on in the 1 minute time frame, right after we missed the initial setup. And did I fall in this trade? I didn't fall in this trade. I was just waiting for the same pattern to happen, right? As you guys know, entries are just the same patterns. I was okay. I was like, if I see another some sort of SMT, and I saw another SMT with this high, I was like, okay, this was a shot. So we first had an explosive price to our entry. I had an explosive price to our point of interest, which is a SMT. Then I'm looking for the market to not do, you know, such of a big. I want to see market not do too much of a big expansion here. I want to see market kind of, you know, don't go too fast, right? If it goes too fast, market will highly likely go right back up and stop you out, right? So we got our first red SMT. Eventually, right after the SMT, we're looking to look for at least 4 candles to not make too much price movements, right? Eventually, this is 1, 2, 3, 4. And eventually, I was looking to enter on Ferrari. At first, he got tapped, but he fully and it instantly got reversed against it. I was like, I'm not entering the trade. I don't want me to have time to even, like, you know, enter the trade, because you literally tapping went away. I want to see some sort of a good reaction in it, then go away, right? Dig into it. And eventually, market went lower. Went right back up higher. Tapped one more time. Eventually, over here, I took a short. I don't know how, my entry was at 156, which is supposed to be at 162. It was a whole 8 pip difference. I don't know how, but you know, it happens, right? And it's a regulated broker. I don't know how the regulator was doing this to me, but it's all cool, right? It's a account where it's not a raw spread. That's why. So I probably need to switch to raw spread, which I will in the future, inshallah. But in this case, you can see this what happened. Eventually, we entered the trade. The reason why I probably had a shitty entry was because I didn't look at the chart, right? I didn't look at the chart. I just pressed a sell. Well, when I pressed a sell in the market, this big, you know, when the bearish kind of happened, that's when I pressed a sell. That's why I probably got that shady entry. So market went down lower afterward. Eventually, I thought our target could get met, but since, as I said before, since we're not supposed to enter all CRTs when there's, when the market's not a clearly one-sided movement, it will fail. Right? Anything times zero is always going to zero, right? What's 100 times zero? Zero. What's a million times zero? Zero. Right? It's zero probability math, right? And same thing to trading. Right? If you're missing one thing, you're gonna still fail, right? It's eventually gonna go on a loser. You may, sometimes you might get, how should I say this in English? How should I name this? Nothing is guaranteed. Right? That's the best way I can say it. But you want to look in a way, as an expert, there's very few possibilities, right? There's very few possibilities, right? A amateur thinks there's many possibilities. A expert thinks there's very few. And as an expert, we're gonna lose, and it did. And I don't even break even. I was like, I'm not gonna break even, man. I looked at the chart. I was like, yeah. I literally felt zero emotion, which is a good thing. Right? I'm very full. Recently I've been a very long losing streak. I've been in a very long losing streak, which is, fantastic. Am I emotional losing streak? No. I'm just using every loss as a journal, trying to eliminate mistakes. So that is not a problem. But right after that, around 9 a.m. is when we had another setup, which this setup I didn't execute. Because why? Simple. Because of the one trade per day rule. I was like, man, even if I make a mistake, I'm gonna take one trade a day, because last time when I took 2 trades a day, even when I made a mistake, I took even a bigger loss. And that bigger loss, we don't want it to happen. But later on the day, this is where our actual starts to happen, right? Oh, so since we're not in a clearly one-sided movement for a new situation, we're gonna switch into 4-hour CRTs only. Right, the only time we use hourly CRT, I've wrote it down. Let me read out the rule to you guys now. The rule says, let me see if it loads. In a New York continuation day, in order for me to use an hourly CRT instead of the 4-hour CRT, they must be clearly one-sided continuation. If the market is clearly continuing one side in one direction, then if the market isn't clearly continuing in one side direction, then I use the 4-hour CRT. I only use the hourly CRT when the market is making a clear situation during a New York session. Basically, what I mean is that when the market is doing like this, that right there, using an hourly CRT wouldn't get chopped up. Because we're entering on that little small price action when we're supposed to be entering on this big price action, then go lower, right? That would make sense. But if we're letting a lower small price action, we're gonna get stopped out. But what we want to see is a clearly one-sided movement like this, right? We don't want to be seeing this, and we enter an hourly CRT and we get fucking chopped up, because hourly time frame is such a low time frame. And that's the lesson number 1. Lesson number 2 is going to our actual trader should have had, which was a Neo Corpus Profile 2. Same context, but at this time there was no daily range, but there was still daily range here after the 9 a.m. candle closed, which right after it closed we had our take profit. But anything we knew we had the same thing, but no daily range. We had a Neo Corpus Profile 2 with an advanced entry with the hourly CRT right over here. So we're looking to use the 8 a.m. CRT as an advanced entry, but our take profit is going to be still here. Now going to 5, it says we're using an advanced entry until the LCD gets disrespected. We're going to be going down to the 5-minute time frame to look for that advanced entry. At 5-minute time frame, the SMT with a collated pair with GU. GU had the SMT. Where was the 8 a.m. candle? This is 8:55, right? Eventually we had SMT with its highs right over here. You can see with the 4-hour time frame. We had a 4-hour time frame SMT. There's our pairs that want to purge it out, and we had SMT without pair. So let me go down to my own correlated asset here. Boom. 9 o'clock. 9 o'clock. Although they both purged out the same candle, but if you can see overall, there was a SMT divergence with the correlated asset right over here. Bearish SMT. This is 9 a.m. candle. Lower time frame. And that's the 9 a.m. candle. We had SMT with its leg up. So overall, we had SMT with this candle, right? So, but we're still fine because, you know, there's an SMT involved. Now, all we're going to do is lower time frame. We're looking for that high to get purged. And for the SMT, if our pairs don't want to be purging out the CRT, or like, you know, as our pairs don't want to be doing if our pairs that want to do the failure swing and purge it out and not SMT, we're looking for there to be valid high, valid low purges, right? In this case, that candle had SMT with there was a valid high. We're looking for that candle to get purged. Then we're looking for consolidation, not big price movements. In this case, we did consolidate a little bit. We didn't do big of price movement. Market stagnated a little bit. So now after this, we had 1, 2, 3, 4. Not big price movement like this. You can see this right over here is a big price movement. Now over here, once that happens, now we're looking for a total soup of any candle that would logically make sense. In this case, it would be this resistance block. Why this specific candle, not this fair value gap? Fair value gap is so close, it's highly gonna go tap this, especially in the 1 minute time frame. Especially gonna go tap this right here. Eventually, we're gonna enter here for a stop loss. In this case, would be a 11.1 pip stop loss. We don't have to increase our stop loss because that's one stop loss. Eventually, we just enter short and going down for this 4-hour CRT low. Why is 4-hour CRT low and not this other 4-hour CRT low? Because 4-hour CRT low got disrespected. So now we just go into this, you know, 5 a.m. low, which got met very quick around 1:48 p.m. And I didn't take this trade. I did see the market do. I was like, let's give you another step to the downside. I'm not gonna take it. And if you pay attention closely, there was no valid high here. By the way, there was no valid high on the CRT. How come there's no valid high on the CRT? And we still were validated the trade was because clearly we're in Friday, right? Market, we're in Friday. So we're gonna use everything logically here, right? Use everything logically. We're clearly we are on Friday first, right? We're on Friday, we're 4 key lowest for our basket liquidity. We're on Friday. We're on the top of the, you know, whole candle of the weekly time frame. We need to close at a fair price, so that means market needs to go lower. We, as well, you know, we're at the top, so market needs to come back down, right? And needs to close at a fair price. And it's Friday, and Friday usually, you know, means it needs to close at a fair price, as I said before. So the valid high, valid low here would have been bypassed, so you could have taken a short right after that. But only what if the market, you know, constantly goes up higher? It wouldn't if you use it right. Right, in this case, logically, it didn't make sense to go up any higher because market is at a fair price to go right back down lower. And this day, now, the next upcoming day, we have a daily CRT downside, which is very nice. Eventually, we have an hourly confirmation for the daily CRT. As do we have a 4-hour confirmation? We do not have no 4-hour confirmation. But right here, it logically makes sense to bypass the valid high, valid low rule. Thanks for watching. This is the lesson for the day. Lesson number 1. Once again, let me go read out the rule for you guys. Is on a New York Fluctuation Day, in order for me to use an hourly CRT instead of the 4-hour CRT, there must be a clear one-sided fluctuation. If the market isn't clearly continuing in the one direction, then I use the 4-hour CRT. I only use the hourly CRT when the market is making a clear fluctuation during the New York session. So the only time we use the hourly CRT ever in a New York fluctuation is market is doing a clearly one-sided movement, right? And this day, was the market was clearly doing a one-sided movement? It wasn't. So it didn't make sense to use our CRT. So when the market isn't doing a clearly one-sided movement, we're gonna be switching even in a New York fluctuation, even without our CRT. When this is the hourly CRT, we're gonna be sticking to the 4-hour CRT only because market isn't clearly doing a one-sided direction in that freaking day. So we're not gonna be using that hourly CRT. We're gonna be sticking to only 4-hour time frame. And this day, I said before, it didn't make sense to me to the hourly CRT, but I said it's worth a shot, meaning it's a lower probability. So, and then I'll ask us up here, how can you bypass a, I said, how can you bypass a high value low rule? By using logic, right? And this logic for the specific day was we're at top of the weekly candle. Weekly time frame is equal to the fair price. We're in Friday, that means market need to retrace, as well as, you know, we are all the way up. We're at the high of the week. We want the same thing, but we're very high, so markets are going back down lower. So by using having the value, we could when that happens, you can bypass the value high value low rule. Thanks for watching. Please like, comment, or share. Do not below, and I'll see you guys later.